Right now, there are roughly 43 million displaced people navigating the globe. When these individuals cross borders, they lose access to traditional banking. Without an account to receive wages, pay rent, or transfer funds, they are pushed entirely out of the formal economy. To survive, they rely on sprawling, informal networks built on physical currency. Money moves hand to hand, across borders and through local markets, leaving absolutely no digital footprint. The global financial system built strict compliance rules to minimize risk and track illicit funds. By entirely locking out displaced populations, those same rules have engineered a massive, untraceable shadow economy. The strain of this friction falls heavily on host nations. Consider Turkey, a country with a highly developed financial sector. Turkey currently hosts millions of displaced individuals, including nearly 3 million Syrian nationals and hundreds of thousands of people from Afghanistan. Global financial institutions practice a strategy called de-risking to avoid the massive fines, often referred to as a corporate death penalty, associated with violating U.S. anti-money laundering laws. Banks simply refuse to process transactions for high-risk demographics. As a result, millions of people living and working inside Turkey are conducting their entire financial lives in physical bills. They represent one of the largest engines of cash generation inside the country. Regulations designed to give governments total financial visibility are actually forcing billions of dollars into a blind spot. Regulatory technology, or RegTech, offers a way out. Specifically, the KEEP pillar of the Digital Local Currency Program provides a bridge between strict compliance laws and human access. The solution starts with a basic fact. Before they were displaced, many of these individuals held established banking relationships in their home countries. Excluding comprehensively sanctioned nations, many banks in countries of origin maintain their financial infrastructure. They are still legally operational and remain connected to global networks like SWIFT, Visa, and MasterCard. Instead of forcing a host country bank to build a highly scrutinized financial identity from scratch, the KEEP pillar ports that existing, trusted relationship across international borders. This illustrates the infrastructure as a service, or IaaS model. The host bank provides digital rails and payment networks, taking zero retail compliance risk. The native bank manages the customer, executes strict KYC protocols, and transmits verified compliance tokens across the bridge. For the user on the street, this complex backend vanishes. They simply open an app on their phone, access their funds, and make digital payments at local merchants. The IaaS framework gives displaced people immediate financial access, while shielding the host bank from the regulatory liability they fear. If we scale this mechanical solution back up to the global population, the mathematics are staggering. This chart calculates the missing volume. If we take 43 million displaced people and estimate a conservative transaction rate of $1,000 per month, the formal global financial system is missing out on capturing over $45 billion in transactions every single month. For host governments, capturing this volume solves a major security blind spot. It converts untraceable physical cash into a visible, regulated, taxable digital flow. For the displaced populations, it means an end to the risks of carrying physical cash. It offers a secure financial lifeline to people who are actively rebuilding their lives. Solving financial exclusion is a clear humanitarian necessity. It also represents a multi-billion-dollar macroeconomic opportunity for the global banking sector. The deployment of this infrastructure is already underway. Afghanistan Pay serves as the real-world proof of concept for the KEEP pillar's capabilities. Institutional stakeholders and financial regulators can adopt the digital local currency framework today to bring these excluded populations into the formal economy. The technology is ready to close the global blind spot, securing both international financial networks and human dignity.